Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host, and today we're exploring an expert advisor called Thrust Origin Pullback. This is a pure price action strategy. It uses no technical indicators at all. Instead, it reads raw candle geometry to spot moments of strong momentum, and then it patiently waits for price to pull back before joining the move. Over the next few minutes, you'll learn exactly how it identifies a momentum thrust, where it places its entry, and how it defines its risk. Let's get started. So what exactly does the Thrust Origin Pullback Expert Advisor do? At its heart, this is a momentum continuation strategy built entirely on price action. There are no moving averages, no oscillators, and no lagging indicators of any kind. Every decision it makes comes from reading the shape and size of recent candles directly on the chart. The core idea revolves around something the strategy calls a thrust candle. A thrust is a single, decisive candle that pushes strongly in one direction. It has a large body relative to its total range, very little opposing wick, and a range that clearly dwarfs the recent average. On top of that, its close must clear the prior swing structure, pushing above recent highs for a bullish thrust, or below recent lows for a bearish one. When all of those conditions line up, the strategy interprets that candle as the footprint of a genuine shift in order flow. Rather than chasing that move at the close, where the reward to risk would be poor, the strategy marks the candle's origin. That is the price where the impulse began, which is simply the candle's open. It then rests a passive limit order back near that origin and waits for price to retrace. Markets frequently pull back toward the start of an impulse before continuing, and this approach is designed to study that tendency. This style suits traders who prefer patient, rule-based entries over chasing fast-moving price. It was built with foreign exchange majors, gold, and stock indices in mind, and it isn't locked to any single time frame. As always, remember that this is educational information only. Trading carries real risk. Losses are a normal part of the process, and nothing here is a recommendation or a promise of any particular outcome. Let's walk through the mechanics step by step. On each newly closed bar, the strategy first checks its housekeeping rules. It only ever allows one thing to be live at a time, either a single open position or a single resting limit order, never both, and never a stack of orders. If a position is already open, it simply lets that trade run on its own stop loss and take profit. If a resting limit order is waiting, it ages that order bar by bar, and cancels it once it has gone unfilled for the number of bars set by the expiry bars parameter, which defaults to 6. When the strategy is flat and idle, it examines the most recently closed candle as a thrust candidate. First, it measures the body as a fraction of the total range. By default, the body must make up at least 55% of the candle, confirming conviction rather than indecision. Next, it looks back over a window of prior candles, 10 by default, and calculates their average range. The thrust candle's range must be at least 1.3 times that average to count as genuine expansion. For a long setup, the candle must be bullish and must close above the highest high of that prior window. When that happens, the strategy calculates an entry price by stepping back from the close toward the open, using the entry fraction parameter, which defaults to 70% of the body. It places a buy limit order at that origin level. The stop loss is set just below the thrust candle's low, with an extra buffer measured as a fraction of the candle's range. The take profit is placed at a fixed reward to risk multiple, 2-to-1 by default. A short setup is the exact mirror. The candle must be bearish and close below the lowest low of the window. The sell limit rests near the origin, the stop sits just above the thrust high, and the target is again 2 times the risk. Before any order is placed, the strategy also checks that the distance between the current market price and the entry respects the broker's minimum stop distance, and that the risk itself is large enough to be valid. If those checks fail, it simply stands aside and waits. This passive approach means the strategy never buys into a fast move at market. It always waits for price to come back to its chosen level, which can mean some thrusts are missed entirely when price never retraces. And remember, losses are always possible, and no setup works every time. Let's look at the actual MetaQuotes language code that powers this expert advisor, shown here just as it appears in MetaEditor. At the top, we have the input parameters. Lot sets the trade size. Look back defines how many candles form the window we measure against. Body fraction sets the minimum body-to-range ratio for conviction. Range factor sets how much the thrust must exceed the average range. Entry fraction controls how deep the limit sits back toward the origin. Stop buffer adds a cushion beyond the far wick. Risk-reward sets the target as a multiple of risk, and expiry bars controls how long an unfilled order survives. Below the inputs are the two signal blocks. The first handles the bullish thrust. The condition checks that the body is positive, meaning the candle closed higher than it opened, and that the close pushed above the highest high of the window. When that is true, the code computes the entry by stepping back from the close by the entry fraction of the body, sets the stop just below the thrust low minus the buffer, and calculates the take profit using the risk-reward multiple. It then places a buy limit order with those levels. The second block is the mirror image for a bearish thrust. Here the body must be negative and the close must be below the lowest low of the window. The entry is lifted back toward the origin, the stop sits above the thrust high plus the buffer, and the take profit is projected the same risk-reward distance below the entry. The code then places a sell limit order. Both sides share the same logic, simply reflected around the candle's direction. Now let's bring it all together on the chart. On screen, you can see a sequence of candles that illustrates how the Thrust Origin Pullback strategy approaches both a long and a short trade. We'll walk through it one candle at a time. We begin on the left with a cluster of small, balanced candles. Price is drifting sideways in a tight range, and you can see a dashed reference line marking the prior swing high at 1.0861. Nothing here interests the strategy yet. These candles are too small and too indecisive. Then comes the standout candle. A large bullish candle pushes up forcefully, with a wide body and very little upper wick. Notice two things. Its range is far bigger than the candles before it, and it closes decisively above the prior swing high at 1.0861. This is the momentum thrust the strategy has been waiting for. It marks the open of this candle as the origin, the price where the push began, and rests a buy limit order back near that level rather than chasing the close. On the very next candle, price does exactly what the strategy hopes for. It pulls back down toward the origin, and as it dips, it fills the resting order at the buy entry marker. If price had never pulled back to that level within 6 bars, the order would simply have been canceled, and the strategy would have moved on without taking the trade. But here it fills, so we're now long, with a protective stop sitting just below the thrust candle's low, shown by the stop-loss marker. The risk is the distance between the entry and that stop. From there, buyers step back in. The following candles climb steadily, candle after candle, until price reaches the take-profit marker, placed at twice the risk distance above the entry. That's our 2-to-1 reward-to-risk target, and the long trade is complete. Now watch the right side of the chart for the mirror image. After topping out, price rolls over and forms another small cluster of candles. A dashed line now marks the prior swing low at 1.0882. Then a large bearish candle appears, with a wide body, little lower wick, a range that dwarfs the recent norm, and a close that pushes below that swing low. This is a bearish thrust. Again, the strategy marks the candle's origin at its open and rests a sell limit order there. On the next candle, price retraces upward into that level and fills the order at the sell entry marker. We're now short, with the stop sitting just above the thrust candle's high. Price then turns back down, candle by candle, working lower until it reaches the take-profit marker, once more placed at 2 times the risk below the entry. Notice the rhythm in both trades. A strong expansion candle signals that order flow has shifted. Instead of jumping in at the extreme, the strategy waits for price to return to the origin of that move, entering at a more measured level with a tightly defined stop. The reward target is always a fixed multiple of that risk. Of course, not every pullback completes, and not every trade reaches its target. Sometimes price never returns to the origin, and sometimes it reaches the stop instead. That is a normal and expected part of any rule-based approach. What this illustration shows is simply the logic the strategy follows when conditions line up. That brings us to the end of our breakdown of the Thrust Origin Pullback Expert Advisor. Today we covered how the strategy reads raw candle geometry to identify a momentum thrust, how it marks the origin of that move and rests a passive limit order there, and how it manages every trade with a stop beyond the thrust wick and a fixed reward-to-risk target. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading involves real risk, and losses do occur. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment telling us which strategy you'd like us to explore next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.